very good morning. Finally, Friday. Welcome to today's episode of Morning Wealth. Three things we will talk about: Treasury stabilize, stocks climb higher, ECB's decision and economic forecast, and Coupang's up 70% on IPO. A rebound in shares of technology companies propelled the S&P 500 to a record close Thursday as investors snatched up shares of growth companies that have lagged behind in the recent weeks as bond yields soared. The broad stock market index added about 40 points or 1%, all-time high, while the Nasdaq also surged 2.5%. Both major US indexes are propelled by a rally among mega-cap technology companies such as Netflix and Facebook. The Dow was also higher, 0.6%, notching its 12th record close of the year. Treasury showed signs of stabilizing, with the 10-year yield sparing an increase after a $24 billion auction of 30-year notes that showed decent results. The dollar weakened against every G10 currency save the yen, with the Aussie leading the pack. Oil jumped 2.5%, while gold retreated somewhat. Investors' demand for stocks, and particularly growth companies, has been revived this week as bond markets have stabilized, with the 10-year yields falling from a high of about 1.6% on Monday to about 1.52% yesterday. Adding to the festive atmosphere, President Biden on Thursday afternoon signed into law the $1.9 billion stimulus package, and the White House said stimulus payments could start hitting bank accounts as soon as this weekend. The market's FANG stocks, Facebook, Amazon, Apple, Netflix, Google, all soared on Thursday. Netflix in particular gaining the most by adding about 3.7%. Facebook, Alphabet also jumped about 3%. Other stocks where Palantir was up 8%, Tesla was up 4.7%. From a sector perspective, 8 out of the 11 sectors were up. Financials, utilities and consumer staples posted losses. In total, among 300 stocks in the S&P 500 finished the day higher, so very broad-based and the breadth of the market was very good. Companies like Etsy and Occidental Petroleum were up 7.2% and 5.5% respectively. China was not left behind this time around. China's Shanghai Composite was up 2.4%, its biggest one-day rise since October. Markets rose elsewhere in Asia as well. Japan's Nikkei and South Korea's Kospi were also up 0.6 and 1.9% respectively. Yesterday was ECB day. The Euro Stoxx 600 edged up 0.5% after European Central Bank said it would raise the pace of its purchases of Eurozone debt after a recent rise in bond yields. The jump marked 4 consecutive days of increases for the index. Madame Lagarde ruled out yield curve control and said PEPP purchases won't jump straight away. To quote her, she says, "We are not doing yield curve control. We are just preserving favorable financing conditions." The central bank also upgraded its inflation forecast for the year to about 1.5% from 1%, but long-term expectations remain subdued. Lagarde said it's possible inflation may hit 2% by year-end, but said the bank would consider such an increase temporary and technical. The GDP forecast for the year was also lifted to 4% from 3.9%, but lowered for the following year. Lagarde said risks for the outlook have become more balanced. She said the ECB is monitoring the euro but not targeting its rate. Some corporate action which might be of importance and relevance. Alibaba might want to get a checkbook ready. Chinese regulators are considering a record fine against the e-commerce giant, exceeding the 975 million levied against Qualcomm in 2015. This is according to the Wall Street Journal. There will also be a nudge to disassociate itself with founder Jack Ma and push to divest some assets and end anti-competitive practices. That is some news, and it might have some lasting effects on the stock. So we might have to keep our eyes open for that. Alibaba's rival JD.com in the meantime posted sales of about 224 billion yuan, which is about 35 billion, which handily topped estimates. Net income was about 24.3 billion yuan. Baidu filed to sell about 95 million shares in Hong Kong. Maximum offer price will be about Honky 295. Lastly, shares of South Korean e-commerce giant Coupang rose 70% Thursday, making it the largest trading debut by dollars raised and valuations so far this year. The Seoul company on Thursday began trading at 59.6 compared with its offer price of 35 a piece. More recently, the stock traded at around 54 a share, valuing the company around 95 billion. Coupang's debut is the biggest for a foreign company since Alibaba Group's blockbuster 2014 debut. Coupang expects proceeds of about 3.5 billion from the offering. Its stock trades under the symbol CPNG on the New York Stock Exchange. Founded in 2010 and backed by Japan's SoftBank Group, Coupang has become one of the 3 largest private sector employers in South Korea. While Amazon and Alibaba have dominated e-commerce in most of the US and international markets, Coupang has created a rare moat around South Korea, fending off both global giants in its home turf. In fact, we spoke about Coupang, I think, a couple of weeks ago in detail, and good to see a good debut on that. That's the update. Stay safe and healthy, and I'll speak to you on Monday. It's the weekend, so have a good weekend as well. I'll speak on Monday.